What is going on, traders? We got a few things to talk about, but before we start, like, subscribe, comment your thoughts below. Let's get into the video. So, today was pretty boring, and actually, today took me by surprise. I'm sure it took a lot of traders by surprise because I didn't really expect much downside. Now, a little downside, sure, but the amount of downside we saw from the triple Qs was very alarming in my opinion, and we're going to get deeper into that in a bit. So, looking at the NQ daily time frame, I've been talking about this for quite some time that at some point in time, let's go to a smaller time frame actually. I've been talking about this for quite some time, maybe past one, two, three, I don't know how many videos, that at some point we're going to want to retest this fair value gap on the daily time frame actually. But there's a fair value gap here. Oh, it's here as well. But there's a fair value gap at around 19,300, 19,250. And so at this point, I do imagine that is where the NQ and the overall tech side of the market wants to go. And as you guys can see, we pretty much are breaking this trend after hours. We're pretty much breaking this trend after hours. So if we give up 19,500, then I have no doubts that we're going to head towards this 19,300, 19,250 level. And then we could potentially, and it's not, written in stone or anything, but we could potentially see some type of bounce from this area. Now, if we go to the daily time frame, we get a much better picture here. We zoom out, and we're actually going to get rid of this trend. I think you guys got the idea just by looking at the 4 hour time frame. And so if we zoom out, and for those of you who are new to the YouTube channel, we've been talking about this channel for quite some time, this rising channel for quite some time on the daily time frame on the NQ. We rejected here, we rejected all this area here, we bounced here, we consolidated here, we then finally broke through, we rolled back into the pattern. And so that leads me to believe that at some point we're going to eventually reach previous highs on the triple Qs, if not all-time highs. But before we get there, there is potential for us to see some type of dip, which actually makes sense. I've been saying for quite some time that this move right here, this V-shaped recovery, whatever you want to call it, I wouldn't call this necessarily a healthy move because it's just an elevator up. And you typically don't want to see that when you're looking at a bullish market. You want to see staircase up. If, for example, you want to see, a structure, then a breakout, a structure, then a breakout when it comes to upside. You don't want to see no structure and just consistent upside. Because at some point, if you keep moving up like that, then the downwards potential is much better. Or I wouldn't say better. I guess it depends on if you're a bear or a bull, but it is much stronger. So that is concerning, but I don't think we're going to see such a huge drop anytime soon unless Nvidia earnings comes in very bad. But if we're looking at the Nasdaq once again, we once we mitigate this fair value gap, there is potential to head lower. I'm not really counting on it. Maybe Nvidia earnings changes things, but I'm not necessarily counting on it. And then we could potentially look at a bounce here. Now, if we do just happen to go lower and hit this 18,800, 18,900 range, which is this fair value gap down here, which will also need to be mitigated at some point, then I do think that this leads for a potential bear trap, all right, where we potentially form some type of inverse head and shoulders pattern. So let's actually mark it out here. So we form some type of inverse head and shoulders pattern. We'll have our shoulder here, another shoulder here. And if we just so happen to roll back into this channel, you guys know, my motto. Anytime we roll back into a pattern, a channel, anything like that, chances are we're going to continue in a direction. For those of you who are new to this YouTube channel, here's a good example right here where I pretty much, for lack of better wording, called the top here, where I said if we roll back into this channel up here, then chances are we're going to head further down. So this is a good example here. But right here, we're doing the same thing, but it looks like it could be in reverse. So if we do just so happen to mitigate this first value gap and just so happen to give up, I would say 19K and head towards this fair value gap, I think it leaves room for a potential bear trap. Now, it's not written in stone or anything, but what I would look for if we do head down here is a rollover back into this channel, which would therefore confirm that bears got trapped. And at that point, we could be looking at all-time highs. Now, if we look at the upside here, there's another fair value gap up here at around 20,300, 20,500, which I've been talking about for some time now as well. So it's pretty much a tug of war game between these two fair value gaps, and it looks like so far this one is winning. We consolidated, and as you guys can see, we look closely at the daily time frame. You see bears are slowly getting stronger here. You're seeing bigger bearish candles, you're seeing smaller bullish candles, which leads me to believe that bears are slowly taking control in this area right here. So it's only a matter of time before we potentially mitigate this fair value gap. And if we do head lower, then that leaves room for a potential inverse head and shoulders pattern. Now, As you guys can see here, we have a lot of turbulence in this area, so I do think that at some point around this area, we could potentially bounce here, maybe consolidate, and then head higher. Now, in regards to this fair value gap, I don't think, and this is another reason why I think bears could potentially get trapped down here if we just so happen to head down here, especially if we don't mitigate this fair value gap up here, then I definitely think there's potential for a bear trap down here. So something to really pay attention to on the NQ. We look at the NES. So in regards to the ES, I mean, you're essentially looking at the same thing as the NQ, except ES has a lot more room to the downside, I would say, to mitigate its fair value gap to the downside. So right here, we pretty much been having a very hard time. We're looking at the daily time frame, by the way, but right here, we've been having a very hard time getting out of this daily supply and demand zone, or I wouldn't say get out, but break above this daily supply and demand zone at around 5680. And if we can't get above 5680, which has been proven over and over again, and we just so happen to break below 5630, which we currently are under after hours, if we continue lower from this point and actually hold, then I do think ES has the potential to head lower. As you guys can see, we have two fair value gaps to the downside, and you're pretty much looking at the same potential scenario as the NQ. Now let's zoom out for those who are new to the YouTube channel. But as you guys can see, same thing with the NQ. We've been trading in this channel for quite some time, about a year now. And the fact that we broke below this channel is very concerning. I don't really trust this move back to the upside, but we trade whatever direction the market gives us, and we try to profit off of it regardless. But essentially, if we're looking at the same thing as the NQ, then we're pretty much looking at the same scenario where we can potentially form some type of inverse head and shoulders pattern here. Our first target will be around 5,500, and then maybe somewhat bounce, not retest, well, not bounce, but retest here, and then potentially head lower, maybe form an inverse head and shoulders pattern. And if we roll back into this pattern, and if we definitely get above 5680, then bears 100% got trapped, and then we're definitely looking at potentially all-time highs at that point. I wouldn't even say potentially, we actually would be looking at all-time highs on the SPY, if this scenario just so happens to play out. So let's mark this inverse head and shoulders pattern that could potentially form out. Again, it's not set in stone or anything, guys. But what you want to look out for, which I think I've made clear by this point, what you want to look out for is if we do just so happen to get down here and mitigate these fair value gaps, you want to see us roll back into this pattern once again. All right. And if we roll back into this pattern once again, then I have no doubt in my mind that we will start looking at all-time highs, at least for the SPY, all right, or and previous highs for the triple Qs. So we're looking at the triple Qs next. So we look at the triple Qs. I mean, it's the same thing we're looking at in regards to the Nasdaq. Again, you're seeing the same thing over and over, where you're seeing two fair value gaps that needs to be mitigated to the downside. So our first fair value gap is around 465, 460 on the triple Qs, which it looks like we could be heading towards. And once again, you guys see bears are slowly getting stronger here. You're seeing a lot. You're seeing smaller bullish candles, and you're seeing bigger bearish candles, which leads me to believe that at some point, we're going to want to retest 465, 460, and mitigate these fair value gaps to the downside. There's also a daily supply and demand zone down here. But again, you're looking at the same exact scenario where we could form some type of inverse head and shoulders pattern. Again, not set in stone. You still want to see us roll back into this pattern. So as far as downside goes, you want to see the triple Qs give up 474 and actually hold. Then you're looking at 470, and then the fair value gap will be between 468, 465 will be pretty much the lowest point of this fair value gap. You can say 464, give or take. And then after that, you're looking at a move towards 460, 456, 458. Now, the reason why I really think this could lead to some type of bear trap is that everyone's expecting a retest to 460 on the triple Qs. Like everyone. Like everywhere you go, YouTube, Twitter, everyone's expecting this move to happen towards 460. And so that leads me to believe that the smartest move that institutions could do, and I'm not an institution or a hedge fund or anything, so I guess, take this with a grain of salt, but one of the best moves they could potentially make is that the best way to trap bears is that we break below 460, and then everyone panics. Everyone's like, "Oh, it's coming. The drop is coming," and then you just roll back into this pattern, like I showed you guys on the previous futures. You break back into this pattern, and then bears get trapped. So this fair value gap all the way down to 456. I think this will be that will be a beautiful opportunity to trap bears, in my opinion. Again, I'm not in the minds of institutions or hedge funds, but I try to gauge what will be the best outcome to trap bears or bulls, because that's really what it's all about for institutions. They want to trap retail traders in order to make more money, in order to liquidate them, all that fun stuff. So that's what I would be looking at for the triple Qs. Now, as far as upside goes, as you guys can see here, we look closely, we rejected this daily supply and demand zone. But not only did we reject this daily supply and demand zone, guys, we rejected this fair value gap. All right, at around, I want to say, what is it, 485? So we failed to break above 485 on the triple Qs, which would have led us to 490 and start getting towards this gap fill. So that's really a sign of concern here, where we not only rejected this daily supply and demand zone, but we rejected this fair value gap. So that leads me to believe that bears are really trying to head towards these fair value gaps to the downside and actually mitigate them. So that's what I'm looking at in regards to the triple Qs. Now, let's look at semiconductors or semiconductor ETFs. Now, in my, I want to say last two videos, I want to say, let's look at SMH. So in my last two videos, it was one or the other or both. I don't know. I lost track. But regardless, so I showed you guys this pattern, this potential head and shoulders pattern here. So as you guys can see, we have a shoulder here, we have a head here, and then we potentially, keyword potentially, I don't want anyone running to the hills with this, another shoulder forming here. Now, what I will say is that I was actually expecting this move to happen where we potentially mitigate this fair value gap up here. Maybe Nvidia earnings causes this move, but right now, as you guys can see, we are breaking below this trend, and this is the daily time frame, by the way. We broke below this trend twice. Okay, right here we closed below it here, and now we are closing below it once again on the daily time frame. Very important. But not only that, we zoom out, as you guys can see, this trend right here that we're talking about right now, that we broke below, we rejected here. So you guys know I don't make this stuff up. We bounced here, we bounced here, we consolidated, we broke through, and then we roll back in, and now we're trying to break through again, or we currently are breaking through as we speak. But regardless, this leaves room for concerns in regards to semiconductors because one, SMH has Nvidia is the number one holding for SMH. All right. Nvidia is the number one holding for SMH. So if SMH drops or Nvidia drops, one or the other is going to drop right along with it. Okay. So if Nvidia fails earnings, or I won't even say fail, but if it just doesn't beat expectations, or if it does beat expectations, but it's not really surprising, or if this is a buy the rumor, sell the news type of deal here, SMH has a long way to go to the downside, guys. And so our head and shoulders, in regards to our head and shoulders neckline, the neckline will be actually at around 200. We break below 200 on this neckline, this thing is going to plummet. Now, I'm a little skeptical. Okay, I am a little skeptical in regards to the downside. Let me make that clear. Okay, and we're going to get into that in a bit. So, again, we do have potential for inverse head and shoulders pattern forming here. And right now, we look closely, you guys see it, we're breaking or we're closing or we actually closed below this trend line. Let's go to a smaller time frame and see how it looks on a smaller time frame. It's the same thing on the 4-hour time frame. Huge engulfing candle here. As you guys can see, we have fair value gaps all the way to 231, 230, and then you have another one all the way to 216 for 215 range. Probably the lowest around 210. And then your neckline is again all the way at 200. So these two fair value gaps need to be mitigated to the downside, guys. All right. So we go back to our daily time frame. Clear as day. Hopefully, I explained it very well to you guys. But let's actually look at the options chain and see what we can find here. So I believe I talked about this before. So these 237.5 puts that's been coming in. All right. Nothing else has really been coming in, but as you guys can see, there is nothing but red here. Now, to be clear, and someone was paying attention to this 145 put, and I bought it up. I don't necessarily. I think this is an unusual trade. I wouldn't take this seriously. I think this might be a sell to put type of deal, where the institution, hedge fund, whatever the case may be, is just assuming or hoping, or maybe they just know that SMH is not going to go below 145. So they're probably just selling a put right here. So I wouldn't take this too seriously, but it does have a 1 million premium. That is kind of scary because why 145? You know what I'm saying? So why 145? That's very, very far from the point here. So could we be looking at a move to the hundreds if Nvidia just so happens to miss its earnings? Okay. But this 237.5 put is what really is getting my interest here. And the reason why is it's not popping up, is it's popping up more than once. So it popped up here for August 30th, 237.5 puts, 1 million premium. Let's zoom over or move over so you guys can actually see the premiums. But you have a 1 million premium here, and then you go to the next one. Where is it? Here it is. So you have another one for September 6th, which is next week, and it's the same thing, 237.5 put, and it goes for next week, September. Okay, and you have a 1.1 million premium on it. Okay, so something to really pay attention to. Um, we can go out to another date. Let's say we go to August 22nd, and let's see what we find here. So you have a 245 put for September. Now, SMH was at like 250, close to 250 when this was alerted, right? You have 265 puts. Okay, this is already in the money, so we don't really worry about that. But let's see if anything came in for today. Nothing, I don't think anything spectacular came in today. So yeah, nothing really came in today. But even in our Discord, we search SMH. And I want you guys to keep in mind that the Discord bot doesn't alert anything from unusual wells. I want to make that clear. So SMH, you have 237.5 puts right here. You have a 1.15 million premium. The date is September 20th. All right. So something to really pay attention to. And again, this is not alerting from unusual wells. This is alerting from something completely different. All right. So I want you guys to keep that in mind when we're talking about SMH. Again, this is a semiconductor ETF, and one of its biggest holdings is NVIDIA. All right. SOX, SOXX, another one, another semiconductor ETF, and guess what? I believe Nvidia is like its biggest holding, and maybe AVGO is its number one. It could be one or the other, but regardless, it holds a lot of Nvidia. But as you guys can see, we're looking at the same exact thing. You have a head and shoulders pattern potentially forming here. You have a shoulder here, your head here, and this could potentially turn out to be another shoulder. But the difference here is that you got up here and look where you're rejecting. You're rejecting this trend. And in case you guys think I'm making this up, you guys see it here. We bounced here, and then we broke down. We retested it, and now we're rejecting it once again. We mitigated this fair value gap. There's another one up here that has yet to be mitigated, but we are mitigating this fair value gap, and we could be heading lower. So we go down to the 4 hour time frame so we can just see how well this retested and rejected. And the 4 hour time frame shows you that there's actually more fair value gaps to the downside that needs to be mitigated. You have one at around 220, and then you have one all the way at around 205, between 205 to 100 range. All right. So really something to pay attention to. You zoom in here, you guys see it here. We pretty much came up here, we rejected here twice. This came out to be somewhat of a double bottom, and then you have somewhat of an H pattern. I'm not a big guy on H patterns, but it looks like an H. All right, I know some traders recognize these patterns or trade based off these things, so I am aware they exist. Do I trade them? No. All right, but they apparently they work, so we're just gonna run with it. All right, but regardless, another one, another ETF that is showing that it is forming a potential head and shoulders pattern, a semiconductor ETF to be exact. And their number one holdings is NVIDIA. Something to really pay attention to. Now, let's talk about NVIDIA. Okay, let's really talk about NVIDIA here. So I'm going to talk about NVIDIA. I really don't have much to talk about with NVIDIA, but we're going to go over the options chain in regards to NVIDIA and what's been really coming in when we're talking about Nvidia here. So one thing I want to point out, we're looking at the daily time frame here. There are fair value gaps that needs to be mitigated here. And so what I will say is that anytime earnings comes around, and one thing I notice about earnings is that earnings does not like to leave fair value gaps open. I'm going to make that clear. Usually, if you think something is going to go one way, so for example, if you think Nvidia is going to go up, for example, right? You think it's going to go to 160, 150, whatever the case may be. I'm not saying you're wrong, okay? I'm not saying it's Nvidia, it's a tank, it's Optimus Prime, times three, it's everything, okay? What I will say is that when you think Nvidia is going to go up, it's really tough to to be really convicted with that, in my opinion, when you have fair value gaps open to the downside. In some cases, you either mitigate those fair value gaps during earnings, or you mitigate them and then you go up. And that could lead to an IV crush if you're like bearish on Nvidia, whatever the case may be. But regardless, it's very rare I see during earnings that fair value gaps are left open. I'm just going to say that much. Okay, that's all I'm going to say in regards to that. All right, I'm not saying Nvidia is going to tank. I'm just saying that I don't think it's safe to play Nvidia earnings. I don't. I'm sorry, I don't. I think the safest thing you could do is buy shares, if anything. Okay, buy shares, do a straddle, whatever. All right, maybe sell puts. I think selling puts is really safe. So if you want to sell puts, I would say go for the 85 target, maybe the 100 target in selling puts, whatever the case may be. I just don't think pure flat out trading Nvidia is really safe in my opinion. That's just me. Do what you want with that information. But in regards to Nvidia, if we look at our Discord, and we look at our bot, our AI bot. Now we just added new AI bots, so if you want access to these, Discord link is in the description below. But they just alert what institutions are trading, sweep orders, golden sweeps, really, really accurate. Okay, so what I will say in regards to the bot and just how it's been alerting Nvidia, one thing I will say is there is a lot of exposure for the 130 strike. I mean, a lot, guys. You have 130 calls for February 21st, 2025. And majority of these are like leap calls. They're not like same week calls or anything like that. They're just like way out there as far as like dates. Okay. You have, I believe there's another one. You have another 130 call for November 2024. You have a call order for that. Let's see what else. There's plenty of more. This thing's been alerting in video all day. So I might not be able to find them all. You have another 130 call. You actually do have one for this week. You have a 130 call for August 30th. So I stand corrected on that. August 30th, your premium is 289. So these do have very high premiums. I will say that much. Um, there's plenty of more. I mean, there's a lot. Okay, you got 125. Okay, this was a put order that came in when Nvidia was like at 130. So 125 puts August 30th. So it dropped from there. So whoever took that trade was definitely in profit. You have a 140 call on Nvidia, but this is for September 2025, guys. So a lot of calls and puts have been coming in for Nvidia, but the main strike point that really stands out is either 125 puts or 130 calls. Now you have a 200 call for December 20th, 2024. I honestly wouldn't be surprised if Nvidia hits 200 by then. You have a 160 call for March 21st, 2025. Again, another call for 125. 119 puts. I actually didn't see this. Yeah, this is so Nvidia 119 puts has been coming in too. You have 128. So you guys get the idea, right? Okay, so I'm not gonna like keep dragging it, but I mean this thing has been alerting calls and puts like all day in regards to Nvidia. But the main strike points that really stand out is the 130s. Okay, 130s and 125s. Okay, when it was below 125, then that's when these calls started coming in above 125. And as you guys can see, after hours, Nvidia is above 125, 126.6. So if you want access to that bot, to our AI bot, feel free to join the Discord below. But regardless, I mean, it's really sketchy. Okay, we can look at. I actually didn't look at the order options flow in regards to Nvidia today, so we're gonna check that out. So, man, these premiums are insane. These premiums are insane, guys. You got like 20 million premiums. Okay, so let's zoom over to the side so you guys can get an idea. 20 million, 25 million, 27 million. The anticipation for Nvidia earnings is like off the charts right now. I mean, these premiums are absolutely insane. It's been a while since I've seen like this many high premiums all together at once, unless it's like SPX or something, or like something ETF that pretty much runs the whole market or something like that. But regardless, I mean, you have 135 calls for August 30th, 25 million premium. You have 140 calls for August 30th. I didn't see this, so this is news to me, guys. 140 calls for August 30th, 125 puts for August 30th, 125, 127, 128, 129. I mean, and the premiums are through the roof. Let's see, 175. Okay, that premium is very low. 100K premium. I wouldn't pay attention to that, but I mean, this is insane. Um, I'm trying to see something that's like crazy, like with crazy strike point. I'm not really seeing anything. The highest is like one, but like that's what I mean. So notice that despite all this, none of the premiums are like above, I mean, not premiums, but strike points are above like 150 or anything like that. They're all really like safe, and anything that's pretty much out there is like very dated. So, I mean, the highest you may get is like 140, 143 in regards to calls. And that leads me to believe that Nvidia might just hit 150, and that's about it, maybe a little bit above it, and that's about it. Again, it's Nvidia. It can prove me absolutely wrong. I mean, the expected move is like 10.9%. So, and 10.9% from this point is like in the 140s. So that's not really anything crazy. And so are we going to assume that okay, Nvidia beats earnings and then it hits it hits its implied move overnight, right? And let's say what happens after that? Does the market keep pumping after that? Or does Nvidia hit like 150 and then it's done? And then, the market drops because unemployment claims is literally the next day after Nvidia earnings. So that's my thing. So what happens after that? So sure, maybe Nvidia does great. I honestly think if I had to give my honest opinion, depending on how tomorrow, if we sell into Nvidia earnings, like the market just sells into the Nvidia earnings, then I do think Nvidia earnings is going to absolutely like beat. Okay. But if we keep like buying into Nvidia earnings and we just so happen to get at least above, I would say 135, then I would be a little skeptical there. All right. So it's really up in the air. We'll have to see what happens tomorrow. But hopefully you guys got something out of this video. We can go over the plays that I talked about in the last video because I don't dodge anything I put out. I don't dodge any plays I put out. So in regards to Google, wait, I didn't even talk about Google last video. What did I talk about? Coin. There we go, coin. I don't know where I got Google from. I'm sorry. So Google, I mean coin. So in regards to coin, coin made the big move after hours. It hit 217 after hours and then it just gave all that back. So we took profit on it at open. Well, no, actually, we set a trailing stop loss for our remaining contracts. So remember, I had 10 contracts from the start. I sold 5 contracts Friday when it was at like when coin was like at 212. We entered at when coin was at like 200s, low 200s, and I took profit. I took five. I paid myself 5 contracts out of coin, and then I held 5 contracts until today. And then I took profit once the trailing stop loss hit at 208 on coin. And I alerted to Discord members to set their trailing stop loss. So made a nice little bag off that. I think it was like 2K or something altogether. Not, nothing too crazy. But in regards to coin, really tough to say what's going to happen here. Today just really didn't give us much. It just pretty much consolidated. It broke back into this ascending triangle. So I'm pretty much done with coin at this point. I just have nothing else for it. Bitcoin hit our target of 63K. It went as high as about 65K. Our target was met, but then it just gave it all back. So I just have nothing else for Bitcoin. I'm sorry, I just don't. The fact that it broke back below 63K is concerning. So you guys see here this yellow line, it broke back below 63.5K, 63K, 63K. And so it looks like it wants to head lower. It really does. And so I mean there's a fair value up. There it is. I didn't even know there's a fair value gap here. I just assumed, but there's a fair value gap here that needs to be mitigated all the way down to about 61K. So yeah, something to pay attention to. Is this the end of Bitcoin or like is Bitcoin going to continue to drop from here? It's really tough to say. Again, the market didn't really give us much to go off of. There was more consolidation than anything. Sure, the ETFs and everything dropped, but in regards to like stocks themselves, you really didn't see much action. All right, so that's what I'm looking at for coin. If you missed the play, you would have got in on the play Friday if you were in the Discord. But other than that, I got nothing else for coin. I'm just not interested in it anymore. We took our profit. We ran. We called it a day. It made that move to 217. That 220 call was really sketchy. I wouldn't say sketchy, but it was just playing it too close. I told you guys in the last video that if you do play coin, I would recommend the 217.5 calls. Let's actually look at the options flow for it. So, to be clear, if Nvidia beats earnings like it surprises, then yeah, all these plays that I've been talking about, or not even all these plays, but the two plays that I've been talking about, they're absolutely going to move. with the market. The market's gonna moon, okay, overnight. Now, how long that mooning session happens, I don't know, but you have 210 calls for August 30th, so that is a good sign. But this is like these two are like the only highest premiums. You have 205 puts for 1 million premium, then this 210 puts for, I mean, calls for 2 million premium. So nothing too crazy there. In regards to Baba, there's nothing to go over. You got to like November to hold this play. So if you're still in it, if you got in at 81, I alerted it at like $81. So yeah, that, I got nothing else for you there. But yeah, a lot of gaps back and forth on Baba. I still think this thing is going to see 100. Do what you want with that information. But that's all I have for this video, guys. Hopefully you got something out of it. Be careful trading into Nvidia earnings. I wouldn't even say trading Nvidia earnings, but if you decide to trade Nvidia earnings for whatever reason, I don't recommend it. I'm not interested in it. I just don't think. If anything, I will buy shares. I will buy NVDL shares. If you don't know, NVDL is like the ETF for Nvidia. So we can look at that real quick. So I would more so buy these shares or maybe SOXL, something like that. I would just focus on buying shares. All right. And if you do dated contracts, do dated contracts. All right. I don't think the best option is to do this week's contracts. And you never know. If you got the capital for it, by all means do that. Selling puts is always a safer, much safer option. You're not gonna get much. You do need collateral, whatever the case may be, but I think that's a more safe option. But NVDL, I think is a great substitution to get into Nvidia instead. Maybe buy some shares or whatever case may be. Um, the problem is that you're going to be you're either going to gain double or you're going to lose double. I'm not going to get deep into that. That's something you have to research yourself. But other than that, guys, that's all I have. Discord link is in the description below if you want access to these plays and you want to see how I'm going to play these semiconductors, earnings, and all that fun stuff. But until the next video, traders, have a good one.